Hey guys, my name's Dan. I'm here to talk to you today about gold and silver and why this is going to be one of the best investments you could ever make in the next 10 years. Currently, with all the problems and woes going on in Europe and the US, you have the Federal Reserve committed to a 0% interest rate policy till 2014. You got the pigs in Italy, in Europe, um, Greece, Italy, Ireland, Spain, Portugal. Uh, and then you have potential terrorist threat that could really kick jump the price of oil, which could really send gold through the roof as well. It would take me a long time to explain the scenario, but basically, oil goes up, gold goes up because the fear and panic spreads, and people take their money out of cash, equities, and bonds and start putting it into quality. It's a flight for quality, basically. But I'm going to talk to you today about two specific companies as of February 10th, 2012. These two companies, one's a gold company, another's a silver. Kinross Gold, KGC, and Silver Corp, SVM. These two companies currently are really smart plays because they're totally undervalued by the market. Kinross is currently trading at 70% of its book value. Let's see, I'll go through a couple things right here. They have proven and probable reserves of 62.5 million ounces, worth approximately $63 billion. They have no debt. They actually have 500 million cash on hand. Their net asset value is around 63 billion as well. Price per share is approximately, I think it closed today at like 1080. And their market cap's about 12.6 billion. And here's a really important measure when you're talking gold and silver companies and any mining company for that matter. Cost per ounce. Their cost per ounce of gold is 715, which is pretty good. It's not the best, but that's pretty good in an up market like this. But my main point of bringing them up is they have no debt. They're actually well positioned to be acquired here in the next couple of months by Newmont Mining. Acquired Knowledge came out with the mergers and acquisitions report and basically gave a strong takeover probability factor for Kinross. Silver Corp, on the other hand, which is my silver play for mining companies, they're currently about $7.10 a share right now, I believe is what they closed today. So their reserves are proven and probable. And before I talk about how many they have, proven and probable, that's the highest indicated measure you can get for a mining company. The next layer, which is not as reliable, is measured and indicated, and then educated guesses are just inferred. So these are the highest levels of measurement that you can get for a mining company. So there's a lot of hard data and research to go behind it. They have 62.7 million ounces of proven and probable reserves. They actually have a negative cost per ounce because their lead and zinc mining operations actually covers their cash cost per ounce for silver. So they have negative $5 per ounce for silver. Their mine asset value is 2.4 billion. Net asset value is 2.5 billion. They have about 200 million in cash on hand, and their market cap's 1.4 billion. So I highly recommend both of these companies. I recommend Silver Corp anywhere under $12. I recommend Kinross anywhere under 14. I recommend you buying a tranche of each, which is, it can be 100 shares for you. A tranche is really what you make it. And then on down days, just keep adding to it. This is really a time to be buying silver and gold. I also encourage you to buy the physical as well. But my main reason in telling you to buy the miners is they actually, historically speaking, they increase at a more precipitous rate than the price of gold and silver would. It's just a historical fact with the mining companies. And these two are really my favorite plays. They're just extremely undervalued right now, and you're getting good money, good value for your money. So Anyways, if you have any questions, comments, shoot them my way. I'll try and answer them. Till then, yeah, buy gold and silver. This is not the next 10 years is not a it's not a good time for fiat money. Since 1971, when Nixon took us off the gold standard completely, that's when fiat money just really started year by year depreciating. So if you know a little bit about gold and silver, you know that it's always been a basis for currency the last 5,000 years, and this is an interesting time too. If you understand that our future liabilities are over 100 billion, excuse me, 100 trillion. So, anyways, I foresee a pretty calamitous event in the next year. I would stock up right now on these two companies. All right, have a good one. Bye bye.